The crypto markets are crashing again. And this time it's because one of the richest and most famous men in crypto, Sam Bankman-Fried, who's the CEO and founder of FTX, has gone broke. And seemingly FTX with him, and all at the hands of his arch nemesis, CZ, the founder and CEO of Binance. This battle between two of the richest men in crypto and, quite frankly, the world is causing markets to go absolutely crazy right now. And I've got to say, I've been in crypto for about 5 years now, and this is one of the absolutely most insane things I have ever seen. So let's get into exactly what happened, what the history is between these two, and what's next. Where are the markets going, and how does this all resolve? I'm your host, David. This is Daily Bread. Let's get into it. To fully understand this feud and how we got here, we actually have to go back in time to 2017 because, see, 2017 was a very different time in crypto. Binance was still becoming one of the biggest exchanges, and FTX didn't even exist yet, and no one had ever heard of Sam Bankman-Fried. At the time, Sam was new to crypto. He came from a background in Wall Street, and he had founded a hedge fund called Alameda Research. And they were able to put their name on the map, trading what was called at the time the kimchi premium. What that was an arbitrage in the price of Bitcoin between Korean markets and the rest of the world due to strict regulations that South Korea had. And what Sam was able to do was set up an entity in Korea in order to sell onto Korean exchanges, which was not allowed for non-Korean investors. And so he was able to capitalize on this kimchi premium by buying crypto from outside of Korea and then selling it at a higher price in Korea. And he became famous from this trade, and this is how he got rich initially, which then led him to becoming a known player in the crypto space. Now, back then, crypto exchanges were not what they are today. They were much less sophisticated, much harder to use, and overall, there was a clear opportunity in the market for a new player to come in and create a much better, much trader-friendlier exchange. And Sam did just that with FTX in 2019. But it gets better. One of his first investors was Binance themselves, because at the time CZ had no problem with them and he was willing to invest in an up and coming competitor. Well, for CZ and Binance, that may have turned out to be a mistake, because we can see here from this tweet just a few months later, CZ saying a market maker from a smaller futures exchange tried to attack Binance futures. And then in his next tweet, he said, the attacker is a well-known account that trades with Binance and started their own futures exchange a few months ago. This was the second attempt they tried. Shame. And you can see that this tweet was in September of 2019. And if you do a quick Google search of when FTX was founded, you will see that the answer is May 2019. So the timeline adds up here. Clearly, this was the market maker being Alameda and the other exchange being FTX. So this is 2019, the start of the rivalry. Well, fast forward to today. Well, maybe not actually today, because now he's broke, but to this year, and Sam is no longer just some up-and-comer, but he is one of the most notorious men in crypto, and FTX is now the second largest exchange, second to only Binance. Or at least that's how it appears, because behind the scenes, things may not have been so peachy clean. Last week, rumors started that Alameda may be in trouble. CoinDesk came out with a report that said they had $14.6 billion in assets, but had about $8 billion in debt borrowed against those assets. However, a lot of the assets on their balance sheet were illiquid and not able to be sold easily, like FTT, which is FTX's own token. So it seems like back during the summer, FTX and Alameda were having a lot of the same problems that a lot of other people in the space like Three Arrows Capital, Celsius, BlockFi, and others were having. They were just good at keeping it a secret. And this is where things get really interesting, because on September 28th, Sam made a bit of a mysterious tweet saying that they were moving some money around, but not to be worried because this was all okay and normal. Well, probably not, because as I'm going to show you in just a second, Lucas Nezzi from Coinmetrics did an excellent thread about what they may have actually been doing at this time. Let's take a look. So Lucas writes here that I found evidence that FTX might have provided a massive bailout for Alameda in Q2, which now has come back to haunt them. 40 days ago, 170 million FTT tokens worth over 4 billion USD became active on chain. Notice, this is the same exact date, September 28th, that Sam made that tweet. Let's keep going. That day, September 28th, over 8.6 billion USD worth of FTT was moved on chain. That was by far the largest daily move of FTT in the token's existence and one of the largest ERC20 daily moves we've ever recorded at Coinmetrics. And he goes on to say that he went through all of the transfers that day and he found a peculiar transaction that interacted with the contract from the FTT ICO, meaning all the way back when the FTT token originally was started, and who would have access to that? Well, it says this 2019 contract automatically released 173 million FTT from the token's ICO. The recipient of the $4.19 billion worth of FTT tokens was none other than Alameda Research. And he goes on to say, so what? Alameda and FTX were intrinsically connected from day one, and Alameda obviously participated in the FTX ICO. But what happens next is interesting. Alameda then sent their entire balance of their address of the deployer creator of the FTT ERC20 token, which is controlled by someone at FTX. In other words, Alameda auto-vested $4.19 billion worth of FTT just to send it back to FTX immediately. And he says, here's what I think happened. Alameda was blowing up in Q2 along with 3AC and others. It only survived because it was able to secure funding from FTX to use as collateral, the FTT, that was guaranteed to vest 4 months later. Once vested, all tokens were sent back as repayment. So it seems like Alameda was not that different from everybody else who was at risk of imploding back over the summer. They just happened to have a giant exchange partner whose founder happened to also be the founder of Alameda and was able to bail them out. But this didn't last forever, and it seems like this house of cards started falling down. A couple other interesting things that happened at this time. The CEO of Alameda Research was Sam Trabucco, who resigned during this period. And another under-the-radar person who also quietly resigned was the head of compliance, Josephine Chan, who, if you try to find her name on LinkedIn or have any connection to Alameda, it's been completely wiped. That's a bit strange. Who has such a great job at such a notable hedge fund? After all, Alameda was the biggest hedge fund in crypto, and then goes on to completely wipe any reference that they worked there at all? Seems like someone might have known something. My personal theory is I think that Sam Trabucco may have been fired, not resigned, because he almost blew up the fund and Sam Bankman-Fried had to bail him out. And then I think there's also a possibility that Brett Harrison, who was the CEO of FTX US at the time, who also resigned, may have known this was all going on, and him being the above board, buttoned up guy that he is, wanted nothing to do with it and left the company. Again, this is all theory and speculation. All of this will come out in the coming weeks, I'm sure. But there's a lot of things that just don't quite add up here. And unfortunately, when things don't add up and tons of money are lost, you tend to go down the path of fraud was probably committed. Now, again, we can't make official accusations. This is all alleged. It is all speculation. But there was likely to be things that were not above board, to put it nicely, happening with FTX and Alameda. And now they're in trouble. There's a lot of questions in the air. As we get more information, I'll make more videos if needed. But that's where we are right now. That's my personal theory of what happened, and it kind of makes sense when you start connecting these dots. It's a bit of a scary time, frankly, in crypto. But I will say on the other side, generational buying opportunities tend to come when everybody is really scared. And that's not me saying that I'm running out and buying myself, nor is it financial advice to do so. But it's something to consider when everybody is so scared. That tends to be the time when you might want to buy. And we can see that just recently in the summer when Celsius and Luna and Three Arrows Capital all crashed. That was a pretty good time to buy too. So just putting that out there. All is not lost. Crypto has been through a lot of crazy stuff over the years. It tends to always come back. So keep your head up. Anyways, guys, I will see you next time. This is crazy. This is the craziest story. Honestly, this is the craziest thing I've ever seen in my 5 years of crypto. And a lot of other people are saying the same who have been in it even longer than me. So we'll see how everything ends. But stay safe out there, guys. I'll see you next time.